Hi, today I have a message about E-Trade. I think E-Trade stock will go down in in January of next year when they report their earnings. The reason I'm telling you this is that there has been a major change in stockbroker business where suddenly most players in this industry dropped their commissions. For example, I trade a lot of stock options, and options are being traded via contracts. I'm making a lot of small trades. Sometimes I trade one, maybe two contracts per trade. And before, E-Trade was charging me around $8 to buy and then $8 to sell one contract of a stock option. And a lot of times these commissions would add up to hundreds of dollars per month because of the frequency of my trades. And what I read was that E-Trade is executing around 220 to 250,000 trades per day at the average cost to the investors of $8 per trade. If you multiply $8 per 250, let's say on average transactions, we're talking about $2 million. So E-Trade revenue was $2 million per day in trading commissions before the major change that happened on October 9th, I think. What I've seen on October 9th was that the trades that used to cost me $8 per trade for one contract of stock options was suddenly only 15 cents. So if I wanted to trade two contracts, it would be only 30 cents, or basically it was 15 cents per contract. The same type of discount was applied to people who trade stocks. People were used to pay, let's say, $5, $7, $8 per trade for stocks to buy, and also the same amount to sell. So now everybody on E-Trade platform, as long as they're putting the online trades and they're not using the broker, they're paying basically pennies on every trade. And E-Trade is, according to my calculations, is losing around $2 million per day in revenue in the last couple of months, basically. So by the time they will have to announce their earnings, this $2 million per day revenue loss will accumulate to roughly $200 million in lost revenue that before were contributing to the earnings. So there's no way that this loss in revenue would affect actually the bottom line and the earnings. So and plus these trades are being executed via computer systems with very little human support, meaning that E-Trade, by slashing the commissions to zero, couldn't really release or basically fire a bunch of the people, a bunch of the employees to cut the costs, because these employees were not involved in those trades anyway. So the bottom line is that E-Trade is losing $2 million per day in lost revenue from the commissions, and when they announce their earnings in January, these earnings will suffer greatly. So I would advise you to buy a put on E-Trade stock or short the stock in anticipation that by the time they announce their earnings, the stock will collapse because their earnings will take a huge hit. Thank you for your time and good luck trading.